Hello everyone, Jeb here. In today's video, we're going to talk about interest rates. Over the last couple of weeks, we've seen a substantial rise in interest rates, which is ultimately going to affect you if you're looking to buy a house. It could also affect you if you're looking to sell a house. So in today's video, we're going to talk about what this rise in interest rates actually means if you're a home buyer or someone selling a property. We're going to talk about why rates are rising, why they're going up, how this could actually affect the housing market, in the next couple of months. And then we're also going to take a look at some numbers. What does it actually mean with interest rates going up? How much have they gone up? Let's put that into payment terms, because that is where it really makes a difference, because as you know, most people live in the payment and not the price. So we're going to take a look at a couple of different price points at what the payment would have been, say, 3 weeks ago and where the payment is today. My name is Jeb Smith. I'm a real estate broker here in Southern California, and my channel is all about real estate. So if you want to stay up to date on everything real estate related, do me a favor and hit that subscribe button. Over the last couple of weeks, we've seen a rise in the 10-year Treasury note, which has ultimately led to higher interest rates. Almost 0.5% from the lows of where we were a couple of weeks ago to where we are today. Now, as I mentioned in several videos, I'm not a mortgage professional. I'm not a mortgage broker. I'm literally taking rates that my lender is giving them and passing them along to you. So this is not a quote on interest rates. This is merely information that was passed to me to help provide an informative video, an educational video on interest rates and the housing market. So we're going to talk about what that actually translates to in just a moment, but let's talk about why interest rates have gone up and how that might actually affect the housing market in a good way. Potentially a bad way, but more likely a good way. So interest rates have gone up because of fears of inflation, right? Fed has lowered rates to near zero, printed a lot of money. And in turn, there's a lot of people out there scared of what that actually means in a couple of years, and rightfully so. And with that, we've seen this rise in rates, as I mentioned a moment ago. But how will that actually affect housing? Well, if you've listened to videos that I've done over the last couple of weeks to months, we've talked about two things that could actually affect the housing market in a negative way, or cause the market to slow down a bit. One is an increase in inventory, and not just an increase in inventory, but a substantial increase in the available number of homes for sale. If you had a lot of property flood the market at one time, that could potentially slow the housing market. The other thing we've discussed is a rise in interest rates. Now, last year, the Fed came out and said that they were going to keep interest rates low through 2023, which made a lot of us think that interest rates were going to kind of stay where they were at that time, maybe adjust a little bit, but not enough to actually cause a slowdown in the housing market. So when I've talked in videos talking about one of two things needs to happen, either a rise in supply or a rise in rates to slow the market, neither of those were realistic at that time. And while I still believe neither of them are realistic in the long run, I do believe that a rise in rates right now in the short term could actually affect the housing market a little bit. Now, I don't necessarily think it's going to stall the housing market to a point where you see a big price reduction or even prices fall at all for that matter. But I do believe that it might affect the housing market in a good way. Now, how could a rise in interest rates affect the housing market in a good way? Because it might actually slow the housing market down enough where home buyers can get into a property without having to bid well above and beyond the asking price. Maybe it stalls the market enough where you don't have these multiple offers, these crazy offers where people have gone so far above the asking price, just pricing other people out of the market. And I believe it will be enough that you could see some people sitting on the sidelines where the housing market gets a little sigh of relief, which in my opinion would be a good thing, a little breather, if you will, because I think we've been on this pace of increases of appreciation, well above where we should be, as many of you probably know. But it's starting to get a little scary, even for real estate agents out there, when you see these home prices go for 8-10% above the asking price in some markets. So a sigh of relief, a little breather, could actually benefit the housing market. Now, if you're one of those people sitting on the sidelines thinking, well, I'm not going to buy now because interest rates have gone up, that's fair. but understand there's still a lot of buyers out there that are going to take advantage of rates. Now, they're not low as they were a couple of weeks ago, but we're still seeing rates in the low 3%, so around 3.25%, maybe 3 3/8 in some cases. So these aren't high interest rates by any means, but they might be higher than what you saw a couple of weeks ago if you were getting pre-qualified then, or if you got pre-qualified months ago. These are going to be higher rates than that. And so if you're sitting on the sidelines thinking, well, I'm just going to wait for the housing market to slow down, that's one approach. But I think you're still going to have some competition out there. So this isn't going to stall the market completely, but it could be an opportunity if you are a buyer. Continue shopping. You might be in a position to, not have to bid against as many people. You might not have to go as far above the asking price in some of these cases. Maybe you're able to get it at fair market value of what the asking price is on that property at that time. Now, keep in mind, if rates do go back down and you were able to purchase with these higher rates, then you're in a position where you could potentially refinance, take advantage of those lower rates, and get the payment back down. So that's where we are with buyers. Now, sellers, where do we stand with you? Well, right now, people have been asking me, should we list our house now? Should we wait to see what the housing market is going to do in a couple of months? I don't honestly think this is going to change, from the seller's point of view too much. I think it just might, decrease the actual number of buyers out there. So again, maybe you're not getting crazy offers, crazy above the asking price, but I don't think that the market is going to change where you're going to see a difference in where you should list, say now, versus where you should list in a couple of months. But ultimately, time will tell. But I do want to take a minute and actually talk about what this rise in rates actually means. So we've gone from somewhere around 2.75% a couple of weeks ago to somewhere around 3.25% now. Now keep in mind, this isn't an interest rate quote, as I mentioned a moment ago. This is really just for educational purposes to give you an idea of what that actually means, because 0.5% sounds like a lot, but when you actually translate it to a mortgage payment, let's take a minute and see what that actually looks like, because I think that helps buyers put this into perspective if they're out there looking. And if you're one of those buyers who did get pre-qualified a couple of weeks ago and you were maxing out your purchase price, you need to talk to your lender. You need to go through, have that conversation and get an update to see where you are, because this could ultimately affect how much you can purchase. Maybe you can't purchase what you could 3 weeks ago or 4 weeks ago. Maybe you're completely fine, but your payment is going to be higher. These are things that you need to know as a buyer if you're out there in the market looking. So we're going to talk about a couple of different price points. First, we're going to talk about the price point of $100,000. So 3 weeks ago, let's say the interest rate was 2.75. The interest rate today is 3.25. So we're going to use that on all of our examples here, that 2.75 to 3.25, 0.5%. And it doesn't matter if it's conventional, FHA, VA. We've seen this kind of across the board with regards to that rise in rate. So a couple of weeks ago, that payment would have been $408 for the principal and interest on that $100,000. Today, it's $435. So it's only a difference of $27. Not a lot of money, but it is $27 a month. Now, $300,000 price point. That 2.75 payment would have been $1,225. Today, that's $1,306, a difference of $81 a month. Again, the higher price point we go, the more money it's going to be. $500,000 a couple of weeks ago at 2.75 was a payment of $2,041. Today, that payment is $2,176. So we're talking about $135 per month in your mortgage payment. That's a big difference for a lot of people out there. And lastly, let's talk about an $800,000 purchase price. A couple weeks ago, 2.75 would have given you a payment of $3,266. Today, that payment is $3,482. That's a payment difference of $216. So you can see how a rise in rates will actually affect your mortgage payment, and how it affects your qualifying is it raises your debt to income ratio. And so that's why it's important to check back with your lender, the person who qualified you, to make sure that you still qualify at those payments and, at that purchase price, if you will. So the real question is, where do interest rates go from here? Hard to say at this point with inflation fears out there and our current presidency printing a lot of money. You could see rates continue to go up a little bit. Now, I'm hopeful and wishful that at some point here soon, based on trends and that sort of thing out there and charting and what have you, is that you're going to hit some sort of resistance and that rates will trickle back down. Now, we don't know for sure if that's going to happen. We've talked about this in a couple of different videos. The long-term view is that interest rates will likely stay low, somewhere probably in those high 2 to low 3%. But we might see this increase for some time, which again may cool the housing market enough to allow you an opportunity to get in there. But I don't believe it's enough to stall the housing market. So that's where we are at this time. I will continue to update you as more information comes out. If you have comments, questions for me, do me a favor, leave them below. For now, I appreciate you taking the time to watch. I appreciate the support. See you again soon. Have a great day. Bye-bye.